Good afternoon traders, it's Simon at Kairos Capital Markets with the daily direction prediction for the 17th of July. So I've got some nice trades and some maybe trades that need a little bit more cleaner price action, but we'll go for the good ones that I like first of all, and into the not so good ones but at least will have a chance of developing. So the nicest one I like so far is gold long for a short-term trade to this upward sloping trend line, the daily 50 and the daily 200 EMA. So I don't think this is going to break. I think this is going to make a high here. I still think we're in a bear trend at the moment. Clearly in the short term we're in a bear trend, but I still think we're in a bear trend overall we are. So that will also be the 618 retracement there as well, on that level there. The reason why I think we're in a bear trend is if you look at the weekly chart, you had this, although the daily shows a double top pattern there, you actually have this downward sloping trend line, which is quite key there. And if you go to the monthly chart as well, very similar story there with a triple touch pattern on the weekly chart here, monthly chart, sorry. So I do feel this is only going to be a short-term play, and that's what I'm looking for. So on the daily time frame, we've got this zone between $1,200 and $1,215, which over the previous several months here has actually acted quite nicely, this little zone here. So I'm happy to take that long at the moment. What we've done here at the moment, we've come up, we've come down, put in a couple of low tests and reversal candles and started breaking to the upside quite nicely now. And on Friday, a nice bullish engulfing candle, which is very, very nice. Also, this coincides with the DXY heading lower and gold looking to take over a little bit of the global currency as the dollar declines a little bit for the moment. Now going on to the intraday, the key thing here I see it on the 4-hour chart is how this 4-hour 50 MA has been respected several times and a nice bullish engulfing candle to the upside. So I was looking at this trade the other day actually, but I didn't like it because of the way it rejected the 4-hour 50 EMA. Although it's got some good support and a good thesis to the upside, I don't believe it was the greatest trade until we broke this 4-hour 50 EMA, which we've done quite solidly now. Just to get, so you can go back, you can see how this 4-hour 50 MA has actually capped price many times, and the fact that it's broke up here and put in a higher high than what it was here, this is the higher low, the pullback here will be quite nice. So on the 1-hour chart we have again roughly what I'm looking for. This is the ultimate where I place an order type thing, so come down, tag you in there and shoot back up there. You could even have a smaller actual stop there. You could really make that quite tight in all fairness if you really want the risk. If however you've got a large size account and spreads always kind of tap you out a little bit, just put it down there somewhere, just so you just with lows around here pretty much, that's all you're looking for. But likewise you can stick it up there, your order as such, both for live entry, and you can still go for a 1-to-1 as such there as well. So that's what I'm looking for on this one. Also notice the inverse head and shoulder pattern here as well. So we've come down, popped up here, collapsed down. We actually made an inverse head and shoulder pattern on the 5-minute chart as well, broke back up. We actually tested the pattern there, shot to the upside, come down, put in a right shoulder here, a little bit twisted, but this is the higher low here, and then we broke up here. This is your neckline, so any form of pullback to around this area here, guys, what I'm looking for is this kind of area here. Any reversal candles, anything around there looks quite nice. Stop below here, and that's a beautiful trade to take, and I said 1.5%. So the next trade I'm looking at as my second best for the day would be the Nikkei 225. So at the moment the Nikkei is at its almost at its all-time highs, but struggling to make higher highs at the moment. If you notice the daily chart, it's going sideways a bit now, but it is actually in a rising wedge pattern, which is a bearish chart pattern. If you look at the weekly chart here now, you do have this multiple dojis and everything else, so lots of deceleration. Bearish MACD to the downside, and RSI is sitting at 85 still, so it's still flatlined there. There might be a little bit of energy to the upside in this trade, but mostly it's to the downside. On the intraday, on the daily chart, I've got this little zone between 1290 and 20090, a bit long-winded there, and 2200 being the highs of this zone here. This zone is quite nice. If you zoom out, you'll see how this zone has reacted as support and resistance in the past, and the fact we have the breakdown to the downside of this zone I quite like. A target for this would clearly be the daily 50, so if you look to the side here, we would probably get 1935, 1925 even, you can go down to no problem at all. Intraday, this isn't the best intraday there is. This is the 1 hour chart here for the moment, but on the 4 hour chart we've got plenty of things here you can see. But what I see here is this: a double top pattern, a breakdown to the downside. I was looking to take it short here actually, that's the end of last month. It never gave proper signals, broke back up again, fine, fair enough. But in general though, it is still making lower highs here and lower lows here, so this is a bit of noise in the middle here. And what I see here is making its lower high in a triangle. So for me personally, I like the triangle, and that's what's highlighted in the 1 hour chart. So now to the 1 hour chart. This is your triangle here. This is making the lower high on the 4 hour chart in the form of a triangle. Broke down cleanly to the downside, and the pullback to here is quite nice. And like I said, you can take profit around about 19.95, 19, even as low as here. You could take profit around that rough area. You want to see how the price really reacts around these kind of key areas. You may want to trail your stop. There's plenty of ways how you can manage this trade. There's no right or wrong way as such, as long as you do it the way your style is. For me personally, I'll probably put a limit at 19.20, and I'm going to watch price action and see what bullish price action comes out of it around this area here. But I will put my limit out at 19.920. If then we get a break and retest of the daily 50, I would then look to enter again. Obviously something like this kind of style here, as a future this would be, and get out round about the bottom there somewhere. Sorry guys, round about this area here somewhere. So another, although it's a 1.7% trade, we know we can lower it down to a stop like that kind of stop as such, and there's another 2.5% trade coming up probably for August. So my two maybe trades now are dollar yen and pound dollar. So the reason why dollar yen's a maybe, I know it's made a double top pattern, but if you look here, it has actually had a break and now could be retesting the daily 50, the downward sloping trend line, and everything else there. Normally dollar yen is inverse correlated to gold, so although this is not the greatest of setups, it's still quite good because of gold. So if I was going to take dollar yen, I wouldn't take gold and vice versa, but personally I think gold's a far better trade. It's just cleaner. On the intraday for dollar yen, as you can see again, head and shoulder pattern, and you've got a break to the downside, come back up here, and I'm looking to take it short there. Your stop again can be as low as that by any chart, by that example there, so you still got the probability there. And what I'm doing is getting out before the highs and lows, the recent highs and the recent lows of the 1 hour chart. Just a quick in and out trade, that's what I'm looking for. But I wouldn't take this as a pivot order or any form of order. I'd actually wait for this to see the rejection of the neckline of this head and shoulder pattern. So it's still clean on intraday, it's just not the cleanest on this pattern here as such, this daily chart here. And again, if you look at the higher time frames, we are in a bull trend, but we just got to have some bullish structure coming along there. Again, at the weekly putting a little higher test, but it's in the middle of nowhere in all fairness. So, and the weekly 50 MA is below us, so that's when we'll get up before them. And the last one here is pound dollar. Although this pound dollar is quite clean here, it's had a nice clean up break to the upside. What I'm wary of this is that it's had 3 days of acceleration, and to have such a deep pullback could mean the pound is getting weaker or the dollar could be getting stronger here. And as you can see on the 1 hour chart, this is the kind of pullback you need. So for me personally, I do think there could possibly be a trade there, but I don't see it being the most likeliest. On the 1 hour chart, we've got 1.3 has been the key level there. That's a key monthly level. So we pull back to this area here somewhere. It's still valid, but then you got to think where to put my stop, risk to reward. And although I could be right in this trade, it's not going to be the greatest. So for example here, if you put your entry there, let's say you had an order there for example, put your stop like that, you could get 1.2% trade out of that, out to recent highs. But like I said, with gold looking better and Japanese yen looking a little, the Japanese 225 Nikkei looks a little bit better than this. Personally myself, I probably wouldn't take this, but it's just a maybe. Okay guys, so it's a bit long-winded today, but I hope you enjoyed it, and I will speak to you soon. Take care.